Hello everyone. I am Kavita Agrawal and today we are here to discuss about stop losses. Stop loss is a very important part of anybody's trading strategy, and if you want to be successful, it's very important you use proper set stop losses. However, like any tool in the stock market, stop losses are also not perfect. Out of the trades that you take, there will be some stop losses which will get triggered. Now, out of the stop losses which are getting triggered, some will be genuine stop losses which fulfill their purpose in the sense that they protect your capital from an impeding loss. So, suppose a stock was supposed to go down 15%. If you use a good stop loss, you may be able to get out in 2 or 3% loss, thereby preserving your capital. There might be some stocks where market volatility creates whiplash, which simply captures your stop loss, and as a result, a stock which may be destined to go 10, 15, 20, 30% up may get stopped out at the beginning itself. Many reasons why this might happen. Sometimes it might be our stop loss strategy, which may be suffocating our positions, because of which the position got exited too soon, or it can be that it was just not our day. The market went against us. We all know that in the market, despite of our best efforts, there is always the risk of market itself going against us. This is what we call market risk. The very definition of market risk is that even if every other risk has been accounted for, there still exists a probability of loss. That is the market risk. And this can lead to volatility, which unnecessarily captures the stop loss. Sometimes it may also be that there was no volatility, but because the stop loss was again set too close, or because the entry was a little premature, the stock got stopped out, but the stock then went up. In all of these situations, what happens is we tend to forget the importance of the stop loss, right? So, for the sake of simplicity, this is what I want to do with you. I am going to divide the screen. I'm going to show you a quadrant here. Let me just prepare my screen for that. While I do that, I would really appreciate if somebody from the audience can give me a confirmation that audio, video, everything is visible properly, because the last time we had the session, there was some audio issues. So I don't want that to happen this time. So if anybody can just give me a quick confirmation, that will be amazing. All right. So I'm going to use this chart format only as a canvas here. So like I told you, suppose you have taken 10 stock ideas participation. Now in these 10 stock ideas, suppose 5 of your stock ideas did not trigger stop loss and they continue to be in your active positions. For the sake of this discussion, we are not going to concern ourselves with these 5. We are only going to concern ourselves with the discussion of those stock ideas which potentially triggers our stop loss. Now, out of the stock ideas that have triggered stop loss for you, right? There can be some stocks. Suppose there are 2 stocks which triggered, or actually there may be 3 stocks which triggered a genuine stop loss. Okay, so we're going to mark this one as a genuine stop loss. I hope you're able to see the text size. Now, out of the rest of the stop loss, out of the other 2 stop loss, one stop loss may have been a whiplash, and last one stop loss may have been triggered, because it was too tight. Now, why I'm telling you this is because I, as a stock trader, experience this a lot. Now, what happens is that these 3 stop losses, which were genuine, They suppose they must have saved our capital from anywhere between 10 to 15% or even 20% of downside. If you do past trade analysis the way I do, you will see the genuine stop losses are what actually makes all the difference between us being winners versus losers. Okay, so these genuine stop losses are the heroes of our trading portfolio. However, the other two stop losses, the whiplash and the ones that are too tight, they are not necessarily the villains. But we have a tendency of marking them as villains, and because we feel so strongly about these instances where our stocks got exited too soon because of a whiplash, or because we set our stop loss strategy improperly, we tend to attack this category of stop loss as well. A lot of times I get this inquiry from prospects or new members who are considering swing trading subscriptions of my business, that why is setting stop loss so important, or is it compulsory for me to set stop loss? People think it is a matter of their luck, that every time they set a stop loss it simply gets triggered and the prices again go back up. The truth is, my friends, it is not happening only with you, and it is not happening every single time. The problem is human psychology here. We humans have a tendency of remembering the bad instances a lot more fiercely than the good instances. So, if you have trading principles, if you have strategy, if you are disciplined, even with all of those things going right for you, market will still take out its grudge on you 20% of the time. Yes, 20% of the time things will still not be in your control, and 20% is a very lenient, uh, very good number. It's actually going to be higher. Just for the sake of this argument, let's take it's 20%. The question here is, what should you do? We are not again talking about the genuine stop losses. We are not talking about the trades which are going according to our setup. These two stocks where suppose we had the opportunity. So like I said, suppose I'm going to take the example for the sake of simplicity of my own trading style. I'm a swing trader. I hold stocks and I give recommendations in stocks with a holding period of 2 to 6 weeks. I am telling you this because this context is very important to what I'm going to discuss with you next. So holding period of 2 to 4 weeks, the return profile of the recommendations is usually anywhere between 5% to 40%, right? The risk reward ratio is always more than 3. This is the important context. So there is the risk reward ratio. I'm just quickly going to write it down. There is the risk reward ratio of 3 plus. There is the holding period of 2 weeks to 6 weeks. And lastly, there is the return profile of the recommendations anywhere between 5% to 40%, right? So maintaining a mix of long term, short term, and medium term, large cap, mid caps, and small cap stocks, this return profile works pretty well, right? And helps us create a return of anywhere between 18 to 24% CAGR over the last 3 years. This profiling has helped us do that. In the last month itself, the performance, because the market was very positive, it's been 64% annualized returns in the month of June itself, basically around 4.78% gains in the overall capital. So this context is set. Now, in this context, how can we work towards capturing the opportunity lost which is happening because of these instances where our good stock picks are getting exited due to stop loss, or in case of whiplash, or setting stop losses too tight, right? And why would we want to discuss this? Why do we want to go into the go up and dig out the bones of old trades to withdraw these learnings? Because it matters a lot. See, the 5 stock ideas that you already have, say, which are active, right? Say we make an average profit of even 5% over there Okay. Now, because our stop losses, because of the genuine stop loss, suppose we experience a average of -2% loss here. Okay. Now, these whiplash and too tight positions that were there, these positions, if captured properly, have the capacity to increase our return per month by more than 1%. Okay, by 0.5 to 1%. Why? Now, see, if you're mathematically sound, you will automatically think that wait, five stocks are contributing to just 5%, and these two stocks are contributing to 1%. Is Kavita getting biased? I'm not getting biased. Hear me out. The stocks which give whiplash after the trade setup has been identified, or where you tend to uh, keep your stop loss too tight, are usually the stocks which exhibit two specific properties. Number one, either that stock has a huge upside. Usually, when a stock is coming out of a bottom and has a potential huge upside, the initiation of the up move is usually volatile, which takes out a lot of stop losses. I'm going to demonstrate this for you on the chart of Nifty. Okay. The second one, where the stop loss is too tight, in what situation do we keep the stop loss as too tight? Normally, when we see that the stock started moving too soon out of our base, their biases kick in, fear kicks in. Specifically, what fear? The fear of missing the unrealized profit. Now, suppose we've invested in the stock and we've been sitting on it for a week. The stock has just started to move and it has suddenly given a 3 or 4% move. Our mindset, our mind will run and focus more on the profit which has now become visible. And in order to protect that, usually the stop loss will be kept tighter, right? So in order to demonstrate, I will show you one example of each, right? I will show you one example of whiplash on chart of Nifty, and I will show you one example of a stop loss too tight leading to missed opportunity and what could have been done better to avoid that situation on the chart of a stock called Latent View, where one analysis where my set target was achieved. So there was a win, but there was no victory because the position was no longer active for me. Okay. So with this, I'm also going to take a screenshot of this so that I can share it with my members in the Telegram channel. I'm going to save that file for sharing them later. In case you want to get access to this image, feel free to join my Telegram channel. It's completely free. All you have to do is open your Telegram, go into the search bar and just type EXP-Invest in. So EXP-Invest in, and the first channel that pops up is my Telegram channel. The reason why I do this is that you don't get caught up in any scammy Telegram channel, and I will also paste the link in the in the comment so you can easily access it. All right. So this is the 15-minute time frame of Nifty, right? Now, the point that I want to discuss is not too far into our history, into the price history. If you look at this 15-minute time frame of Nifty, just focus on this little section. Why is this little section important? Because as you can see, there is this blue line moving right here. This blue line is basically the 200 EMA of the 75-minute time frame. Okay. Now, it is visible on the 15-minute time frame because I have formulated it so, but it's the 75-minute time frame, 200 EMA support. As you can see, the support was taken here very well and the price went up. Then the price came down, and just 2 days ago, we experienced a strong downside opening but a quick recovery after the market. Why is this downside opening significant for a discussion? Because the market, basically, when the market opened lower, broke this support, it created a strong volatile movement across all stocks. Personally, in my portfolio, two stocks triggered stop loss. One was Titan, one was UPL, right? So I want to take you on the chart of Titan and I want to show you what happened. Okay. So this is the Titan 15-minute chart. Okay. So we have had an active position in Titan from this point right here. Okay. So when the whiplash happened in the market, let's just go back to Nifty and I want to check the date and the time. Okay, so this was the 14th of August, like I said, the beginning of this week. Now we will go back on the chart of Titan and we will find out where this 14th of August volatility reflected. Okay, so this volatility basically reflected right here. All right. Okay, so as you can see, we started the position somewhere here, and when this volatility happened in Nifty, the last leg of rally which happened in Titan got entirely erased. So why was this not good for us? Because we at that point of time had our stop loss set exactly where it is right now. Okay, so because the stop loss was here, when the price came down sharply, the stop loss got triggered and the position got exited. After some analysis, I noticed that the price was not going anywhere lower, and in fact it was showing signs of bouncing back, right? So as a result of that, based on my experience, I advise my members to re-enter. If we hadn't re-entered, what would have happened was we would have missed out this rally of 2.6%, which has come in the stock of Titan recently. So where our profit today stands at around 6%, we would have been exited at only 3% profit. You can see the significant difference of why it is important to take, keep an eye out when key support levels are breached. The reason why I showed you the chart of Nifty, where I'm going back, the reason why I showed you this chart of Nifty is because this blue moving average is the 200 moving average and it is a key support level. When this was breached, but it was not breached sustainably. So the breach did not sustain, the market recovered again. It was a sign that whatever stop loss might have been triggered may have been a whiplash exit. So after some observation, the positions were reinstated in the chart of Titan. There was another stock also where the stop loss was triggered, but that was a genuine stop loss. And how could we tell that was a genuine stop loss? Because the price sustained below the support level once the stop loss was broken. Now see, I understand that for a retail investor, identifying things like where is the stop loss, where is the key support level, whether it's a genuine support level or not, is not possible. It involves a lot of analysis, it involves a lot of hard work, it involves a lot of screen time, which obviously during market hours is not going to be possible for you. So that is the reason why I have introduced these swing trading subscriptions where people like yourself can easily participate and trade. The reason why I'm doing these live sessions is to help you enable in your learning. So it is a learn on the go kind of program. Now, in this situation where the whiplash happened, it was prudent to re-enter the stock and adjust the stop loss a little bit. Going back on the chart of Titan. So how our strategy in this case played out, that even though the stop loss got triggered, it was at 1 in 10 kind of situation where we re-entered the stock. Okay. So it's not that we abandoned the stop loss completely, but we had simply moved the stop loss to the next visible support level, which was this blue, again this blue line, which is the 200 EMA of the 75-minute time frame on the chart of Titan, right? So I moved my stop loss there. Now the price clearly went up, and when this key resistance, that is the previous peak, was breached just today, then the stop loss was again revised from this level back to this level, right? Now on this chart of Titan, we are waiting for the next resistance zone to get breached. That is basically this somewhere near here. Now when this resistance zone gets breached, we will again revise our stop loss higher until we reach our target. Okay, so this was tighten for you, and how you should approach whiplash. So we've discussed in short how to identify a whiplash, that if a price if the overall market experiences a sharp dip, but the dip does not sustain, if a key support is breached but the price don't sustain below it, that's basically a whiplash. Okay, or a spike or a sudden movement, or volatility, lots of different names but the same logic, a breach and a non-sustenance. Okay, so you've identified a whiplash. In that scenario, some stop loss got triggered. Go back and look at the uh, specific stock, or check with your analyst what you should do. Should you re-enter the stock? Should you let the stock go? Right? If the analyst says re-enter, or if you're an analyst yourself, if you do your own analysis, if your charts suggest re-enter, then you re-enter the stock, otherwise don't. And I want to emphasize again, this is a 1 in 10 kind of situation. Every stop loss trigger should not be re-entered with. It is a very dangerous thing to do. Should be done with full objectivity, not emotions. Okay, so basically that's all that is there. Now let's move on to the chart of latent view, and I want to show you the situation where basically I identified a great stock idea. The analysis was a win, but the execution was not a victory, right? So look at this. It's just one thing that I need to do. I'm just going to apply the watermark again. So there is a very good question by Zarna. They are asking how to prevent stop loss hunting when you put stop loss in the system. So Zarna, you cannot avoid stop loss hunting, because see, stop loss hunting, if it is a real thing, is being done by people who have much more advanced systems than you, have access to much more sophisticated data than you do. Now, if they come for you, if they have made up their mind that they are going to take up this support level, which can be a very common stop loss level for most retail traders, they will get you there. Okay, there is no way you can avoid that. A good thing would be to check with your analyst whether you should re-enter the stock, especially if you see the stock recovering. But then again, take it with a pinch of salt, because every exit should not, in case of a recovery, should not be exited. There has to be very objective reasoning to that. And the second thing is, obviously, don't suffocate your positions with very tight stop losses. Have objective stop losses based. That is something that I'm going to discuss in this talk idea. Okay. So for the sake of this discussion, I need to add some context in terms of why I gave this recommendation to my members. Okay. So as we can see, this stock latent view, this has been declining from the top since December 21, and it declined around 60%. Massive decline. Now, since June 22, the stock came into consolidation and it formed what people popularly like to know as a double bottom, right? Now, when the double bottom was formed, I noticed that something else started happening in RSI, which I call the phenomena of range shift. And that is when I gave my members a stock idea in this, a stock recommendation, a long recommendation right at the bottom. It was a great entry. The risk reward ratio was very attractive and our timing was near perfect as it could be. What happened? So what happened that stopped us from actually booking profit in this position? So once the position was entered at this pin right here at around 329 on 23rd of May, we started revising the stop loss, or rather I started recommending the stop loss revision. Remember what I told you when I was going through the theory, that the suffocating stop losses usually happen when the stock starts moving too fast. So here you can see that the stock had fallen 15% in a matter of just 9 days. Okay. So there was a bit of recency bias playing in, that, oh, the stock is still in bear trend and I'm taking a huge risk by giving a long call to my members. Okay. So what happened here was that when the stock recovered nearly 6% in 2 weeks, I was more concerned with making sure that the stop loss was at a break-even point rather than giving the stock some place to move. One important thing to note here is that when a stock is coming out of a big correction, it doesn't move like this. it moves in zigzag lines. Okay, these zigzag lines also have a very peculiar property. The peculiar property is that this uptrend usually begins with the correction that is happening after each upswing being much bigger. So as a result of that, we need to make sure, and by the way, this is something, this analysis which I'm sharing with you is my personal learning, derived after digging up all the bones of my past trades, past recommendations. This is something that I do very often. I dig up all those bones, crush them down, juice it out, and then draw these learnings which I'm sharing with you. So you're not going to find this in any book, any other video. You will not hear any of this from anyone else on the internet. So yeah, so the movement that happens, it does not happen in a certain linear momentum. It happens like a ball basically. So the first time the stock goes up, you can see that the confidence of the price is very low, so it almost falls back entirely to retest the support again. It gains some more momentum, it goes back up again, comes back down, but this time it doesn't cover the entire swing. It will cover, say, 78% or 75%, goes up again, falls back down. This time maybe it will take 50% correction, goes back up again, bigger swing, comes down maybe 25%, goes back up, then maybe 10% and goes back up. So this is basically accelerated momentum which unfolds. Now this bit of knowledge is important for you to understand this, because it plays a very important role in setting the stop loss. Now, the mistake that I made in Latent View, which costed me nearly, I'll tell you how much it costed me and my members, nearly 25% of gains in a matter of 70 days. The mistake was that the stop loss revision happened a little too soon. So what I did here was, when you're trading, when you're analyzing charts, if you do it yourself, it is very important to stick to the wave that you started analyzing in the first place, even when you are doing your stop loss revisions. So when I identified the stock idea, I worked with a wave of 1 degree higher. I'm sorry if I'm getting a little too technical, but stay with me. So basically I started, let me just clean the charts a little bit so that you can see the drawings that I'm about to make. Okay, so when I basically started analyzing this stock idea, this stock recommendation, I was working with this wave. Okay, however, when it was time basically for me to revise my stop loss, I moved from this big wave to the small waves. You see the difference in the small waves? Okay, so the problem with the small waves was, let's go back to this 15-minute time frame and let's zoom in a little bit. Okay, so the problem with these small waves is that as long as they are in the uptrend, it's fine. But when the correction happens, they breach at least 1 to 2 support, and that is exactly what happened here. So when the price had moved from my entry to plus 6% in 2 weeks, my attention shifted from the bigger wave because I got obsessed with the position. So I started, that's what we do, right? We start off with a time frame, but then we start looking at the 1 minute time frame, the 3 minute time frame, right? If you're doing, like, we start going smaller and smaller, thinking if we look at smaller time frame, if we look more at the price is going to tell us better what is going to do next, which is not true. It is not going to happen. Even if you sit and look at tick by tick chart, what is going to happen, all of that data overload is going to force you into making wrong decisions. That's what happened with me also. I basically made wrong decisions, and the stop loss that I set here, basically I trailed the stop loss to this little support that I could see. So this is indeed a support, but this was a support suitable for someone who was doing, say, an intraday or a very 2-3 day kind of a trade, not for someone who was holding a 3-month long period. Okay, so my ideal stop loss here should not have been anywhere higher than 325. Okay, so these drawings that you actually see on the chart of white and the red lines was me going back into this price and analyzing what were the ideal resistance levels that I should have waited for the price to breach in the first place and then revise my stop loss higher, rather than seeing the price and unrealized profit building in my portfolio and then revising the stop losses, fearing that I might lose that portfolio. So one important thing here is that, my friends, if you want to succeed in trading in the market, stop focusing on profits entirely. Focus only on losses. Focus only on how you can reduce leakages from your portfolio rather than focusing on the growth. Because there is a saying, right? If you keep watching a tree, it's not going to grow. If you keep watching a pot, it's not going to fill. If you keep watching the prices, they are not going to change any faster. You are going to end up exiting the position sooner. So that is all I had in today's presentation. I hope I was able to add some value to you and share some of my learnings. If you enjoyed that, if you like that, if you think I was able to teach you something new, please like the session and leave a kind comment. Join my Telegram channel. I would love to hear from you, connect with you, and help you in any way I can. Now, before I go, I will take 10-15 minutes to answer your stock queries. So if you want me to take a look at your positions, please drop the name of the stock and your buy price if possible. I'll be more than happy to do the analysis and help you with your stock positions. All right, so I'm going to, while people start adding their comments, I will quickly take a look at the comments already posted and see if anything is been questioned. Okay, just skimming through some stock recommendations. So Bhagaramji is asking that he's lost 60K in stock market. How can you recover? So Bhagaramji, I'm guessing you did derivative trading without proper risk management or capital allocation. So if you're a retail trader, and especially if you have, a daytime job or a business, it is not practical for you to do something as dangerous as derivative trading. I suggest you do swing trading. There is a lot of growth opportunity if you do swing trading with an analyst's help. It's not practical for you to go and start, like, join a course, learn things from scratch, because it takes anywhere between 5 to 10 years to learn and master the art of analysis of stock market. You can become good in execution in 2-3 weeks if you have the right guidance. So my Trade Together program basically helps retail traders like you via systematic hand holding and timely instructions in becoming better in swing trading and making money. So if you join the Telegram channel, you'll be able to see more details about it. So we've already questioned that. So Bhargav is asking, what is a good stock for SIP? See, Bhargav, if you want to do SIP, then I think the chemical sector is really good right now. Some fertilizer stocks like Deepak Fertilizer, UPL are doing really, so they've fallen quite a bit from the last peaks. And I believe that a strong upside is coming. Now, if you're talking about SIP, I am assuming that you want, like, you're talking about the long term. So for long term, it will be a good idea to invest in sectors which have not performed or participated in the previous rally. Within those sectors, whichever is like the top performing stock, go for that and start accumulating them on dips or on breakouts, whatever be your strategy. Okay, now Swarn is asking for a suggestion of good stocks. So Swarn, as a SEBI registered research analyst, I don't give out free recommendations. I'm more than happy to help you with your existing positions. But If you want stock recommendations, then I will request you to check out my Trade Together program. Because see, even if I tell you good stock names here, what's going to happen is you're going to go and buy. Okay, buying a stock is not enough to make money in the market. There are people who have lost money in great stocks like Infosys and Bajaj Finance, including myself, because it's very important that your timing is good. You need to buy the stock at low and sell the stock at high. And it's not as easy as it sounds. Between this buying and selling, there is a management of position that needs to happen, and that also involves mic check, mic check. Okay, that seems to be working. Let me just make sure. Is this, am I audible now, members? Sorry about that. I had a tiny little technical issue with my mic. It seems to be fixed now. Okay, moving on. Um, there were some nice comments here. So, Anirudh, how to select the stock to analyze the stock if the stock is already in uptrend, already given breakout? Shall we wait for small correction and then ride to the next journey? Anirudh, this is a very complicated question that you've asked. So, for an uptrend, there is a concept of RSI range shift that I had discussed. So, I would suggest you go and watch that video. That will do you more good. So, if a stock is an uptrend, then look for the momentum to take a support, and at the support level, you buy the stock, and then you wait for the rally to unfold further, but be sure that you use your stop loss because usually it can be a little bit risky. Okay, so Mahesh ji is asking for the analysis of Tata Chemicals for fresh entry. Oh, sorry, it's supposed to be Tata Chem. All right. Oh, Tata Chem actually looks extremely attractive because as you can see, okay, looking very attractive on the 15-minute time frame. Let me also share my screen. All right. So attractive on the 15-minute time frame. What about the 75-minute? What is happening in Tata Chemicals? It's in a sort of a consolidation between these two trend lines, if you can see them. So this trend line and this trend line. So the price is basically going in a channel between them, and it's also so okay. So Anirudh just asked how to participate in a stock that's already in uptrend. So I will answer that
also, and the question by Mahesh Ji, both of them in this one. So here what you can see is that the stock of Tata Chemical on a daily time frame is in a pretty strong uptrend, right? The correction which happened here is just 24%, which is not a very big correction for a stock which has rallied nearly 5x, okay, since the COVID low. So even for a swing trader, it's pretty established that the underlying trend continues to be positive. So we analyze that firstly on the daily time frame. Okay, so use the daily time frame to establish what trend, the daily or the weekly time frame, to establish the primary trend direction. In Tata Chemical, it is positive. Now we come on the 75-minute time frame. On the 75-minute time frame, the support level of the RSI is basically 40. Why? Because the underlying trend is bullish. So when the underlying trend is bullish, the RSI support level is around 40. So when the 75-minute time frame comes to RSI on the 75-minute time frame comes to around 40, or the 15-minute time frame comes to 30. Okay. Why 30 on 15-minute time frame? Because see, here the noise is a lot higher, the volatility is a lot higher, so obviously the RSI is more sensitive. So if it is going to take support, it will take support near the level of 30. Okay. So here, like we can see, it has taken support at the level of 30, and then it has given a positive divergence, and the green color on the chart marks a key support zone based on historical prices. So we have multiple evidences that this is potentially a good support level. So what we can do is good entry can be made here. So Maheshji, that's the answer to your question also, that yes, Tata Chemical looks good for a fresh entry right now. Next question is, where should you stop loss be? Now what we are seeing here is that Tata Chemical is trying to come out of the consolidation of the upward sloping channel, which is basically keeping it a prisoner right now. However, it also has a tendency to keep going down and testing this lower trend line. Okay. Uh, there is also another internal trend line which I have just drawn. So for the sake of safety, I would take this low or this tiny little spike. Between this is where I would like to place the stop loss. So from the current market price, based on all these facilities, around 3.5% would be a little tightish kind of a stop loss. But again, like if the stock would go down to say 109 990, I would rather make a fresh entry there than expose my capital to a 6% loss. Okay, in swing trading, 2-3%, if you can protect your capital from 2-3% loss, you should protect your capital. Okay, so because it all adds naturally. So your stop loss would be somewhere around 950 to 951. And I think a good target would be this trend line right here. So the target would be somewhere near the level of, I would say, let's just be a little conservative, around 1200. Okay. So if there are active members, you will basically also see this stock idea being posted to you tomorrow, because this looks like a very good opportunity. If you want to succeed in the market, you need to have systems. So what you just saw me do on the chart that is marked this as orange is basically, in my process of analysis, I identified something which can be a good potential entry. So I added it to the designated watch list, because if we keep relying on memory for everything that we see, it's going to get difficult. Okay, now moving on. So that was that from Mahesh ji. RVNL, we have a question on RVNL. Let's see, by Mr. Vinay Singhal. Huh. See, RVNL chart is really difficult to analyze because, as you can see, it has a tendency of giving sharp up moves, big consolidations, and big corrections, and sharp up moves again. So RVNL is a very risky kind of a stock, but it also offers great opportunity. So if you want to purchase a stock like RVNL, I will suggest you keep allocation really low, never more than 1% of your total capital, because you don't want to expose your capital to such volatility. Okay. So maximum 1% capital allocation. And with that, you can indeed go ahead and purchase the stock of RVNL. The reason being that the underlying trend in RVNL is super bullish. And so far on the chart, we don't really see anything which would suggest a massive downside. I would, however, expect the stock to come back down and retest the level of approximately 109. So that gives around a 10% of buying range for you from current market price to minus 10%. That being said, it is also important that you maintain a stop loss. So this green line is the 100 EMA of the daily time frame, and this would act as a good stop loss level. So 108 would become a potential stop loss. And like I said, the risk here is really high because 108 stop loss basically means nearly 13 to 14% of 13 to 14% of risk on your capital, right? That being said, the upside is also a little nice here. The first target itself is 156, which is around 22% higher. And as for the second target, it's very hard to give because then that goes into an area which is even beyond my trend line. But I would expect the stock to test out the level of 200 sometime soon. However, this is not a stock idea that I would give to my members, not a recommendation that I would put out, because I believe more in making money consistently than making money fast. Because when we try to take the fast route to making money, we also opt for the same route also has a stop called losing money very fast, which is not something that we want to do. Okay, so Anirudh is asking for any stock for fresh entry for 20K for swing trading. So, Anirudh, I am guessing that you have a capital of 20,000 and you want to do swing trading with that. See, if you have a capital, see, Anirudh, if you want to trade in the market, okay, there is some minimum capital that you should maintain, because if you try to trade with capital minimum lower than that, it will lead to biases for you, okay, and it will lead to you getting obsessed with profits more than with learning. Now obviously with a 20% 20,000 capital you can't really make uh, that much gains, right, like practically mathematically speaking. So it's not a very good proposition right now. If you have limited capital, your focus should not be on what stocks I can buy, because having very low capital stops you also from investing in good resources like services of a research analyst or subscription of a reliable recommendation services. You will be on the lookout for free stock ideas or YouTube videos or recommendations from people who don't really have the correct license or credibility. The problem with that is that your chances of making money with any free resource is negligible. A lot of people don't realize that because of false advertising which goes on in the market. So think about it logically, be practical, focus more on increasing your uh, skill sets and your corpus to begin with. And once you have at least a base minimum of like 1 to 2 lakh capital, then it's a good idea to do swing trading. Right now, if you want to park your capital, I would suggest you to just buy an index fund and let that capital sit, accumulate it till it reaches a substantial level of 1 to 2 lakhs, and then get in touch with me. No sound. Okay, sound seems to be working. Sona, please check your system. Okay, which EMA can be used for swing trade that you prefer? Please suggest. Okay, Anirudh, I would again recommend you to please visit the old videos because EMA is a topic that I have covered multiple times there. Now moving on to the comments again. Looks like my connection is acting a little dodgy. Okay. Swarn, I would request you to please get in touch with my Telegram. Get in touch with me via the Telegram link that I have shared, and I can tell you more about it there. There is a user asking about how I filter stocks for intraday trading. So, sir, I don't do intraday trading because I don't have the cognitive abilities to sit in front of a screen and look at prices all day long. I don't want to punish myself like that. Also, the problem is that the field of technical analysis offers a lot of opportunities, But when you do intraday trading, you're dealing less with uh, sensible data and more with noise. Okay, so it makes things very difficult. It put things out of order for you. So I don't do intraday trading. I don't recommend intraday trading, and I don't suggest people do intraday trading either. Because if you can optimize your efforts, you can make a lot better, like you can get a lot better results with swing trading and grow your capital in a more consistent manner. Okay, so with that, we've come to an end of this session. Thank you so much for being great audience and asking such good questions. It was an honor to present to you. I will see you again on next Tuesday in my live session, where I will bring to you one topic in the Retail Trader Special Series, which will teach you the theoretical and practical application of that particular topic. What the topic is going to be will be announced in my Telegram channel in couple of days. On Friday, I also post on my YouTube channel the market outlook where I discuss Nifty's charts, Bank Nifty's charts, and their key levels, and the intersector charts to see which are the sectors which are coming in momentum, which are the sectors which are going out momentum. This analysis is very important in redirecting our capital from the losers to the winners so that it can grow, right? I aim to grow the capital anywhere between 3 to 6% every single month. So this is the range that I'm working with now. It keeps changing obviously as my skill improves as well. This is what I aim to deliver for the members of my Trade Together program as well. If that is something that you're interested in, please do join my Telegram channel and I can share more information with you there. So with that, I take your leave. Namaste.